Good evening, ladies and gentlemen. I'm Akash, moderator for the conference call. Welcome to Sigachi Industries Limited Q4 and FY26 earnings conference call, hosted by Go India Advisors. As a reminder, all participants will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone telephone. Please note, this conference is being recorded. I would now like to hand over the floor to Ms. Riddhi Shah from Go India Advisors. Thank you, and over to you, ma'am.
Thank you, Akash. Good afternoon, everyone. It's my pleasure to welcome you on behalf of Sigachi Industries Limited. Thank you for joining us today for Q4 and FY26 earnings call. We have on the call Mr. Amit Raj Sinha, Managing Director and Chief Executive Officer, Mr. O.S. Reddy, Chief Financial Officer, and Mr. Vivek Kumar, Company Secretary and Compliance Officer. Please note that today's discussion may include certain forward-looking statements and must therefore be viewed in conjunction with the risk that the company faces. I will now like to hand it over to the management for opening remarks. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. Welcome to the Q4 FY26 earnings conference call of Sigachi Industries Limited. The financial results and investor presentation have been uploaded on the stock exchanges. I hope everyone had opportunity to review them. FY26 was a year of challenge, reflection, and decisive action for Sigachi. For the past several quarters, our focus has remained firmly on execution, operational discipline, and reinforcing the foundations required for sustainable long-term growth. Today, the company is operating with stable business continuity, continued customer engagement, and steady progress across its strategic priorities. The efforts undertaken over the course of the year have been directed not only towards maintaining operational continuity, but also towards strengthening the organizational structurally through sharper oversight, stronger systems, and greater execution discipline across functions. These remain important priorities for us as we continue to build a more resilient and future-ready organization. During Q4, our operations remained stable and customer engagement continued to be healthy across geographies. Our cellulose-based excipient sale quantity stood at 14,857 metric ton with nearly 82% capacity utilization. The 12,000 metric tons per annum MCC capacity project at Dahej continues to progress in line with planned timelines, and upon commissioning is expected to increase our total cellulose-based excipient capacity to 30,000 metric tons per annum by Q4 FY27. In parallel, the 1,800 ton CCS facility at the same location, Dahej SEZ, is also progressing steadily and will support our strategy of expanding into higher value excipient categories and strengthening our overall product mix. The API R&D Center continues to strengthen our development and regulatory capabilities while progressing on the CEP filing supports our long-term expansion into the regulated markets. Our O&M vertical remains a steady contributor and continues to evolve as a scalable service platform aligned with long-term growth priorities. We have also continued to strengthen our organizational leadership and people capabilities. During the quarter, we welcomed Mr. Atul Davle as the Chief People Officer, whose experience in building scalable organizations and leadership systems will support Sigachi's next phase of growth. As we move into FY27, our priorities remain centered around operational discipline, execution of key expansion projects, strengthening our product portfolio, and improving profitability through consistent and focused execution. To our employees, customers, partners, lenders, and shareholders, thank you for your continued trust and support through a demanding year. Your confidence in this organization has been important to us, and we are committed to honoring it through what we deliver in the quarters ahead. With that, I now invite our CFO, Mr. O.S. Reddy, to take you through the financials and operational highlights for Q4 FY26. Thank you.
Thank you, sir. And a good afternoon, everyone. During Q4 FY26, Sigachi reported total operating income of INR 121.89 crores. EBITDA for the quarter stood at INR 15.4 crores with a margin of 12.63%. Net profit came in at INR 7.6 crores, translating to a PAT margin of 6.23%. The MCC segment contributed INR 85.33 crores, while the O&M and API segments recorded revenues of INR 14.63 crores and INR 17.06 crores respectively. Guidance for FY27. We expect revenue to be in the range of rupees 650 to 675 crores with an EBITDA margin of around 18 to 20%, supported by incremental capacities from Dahej and Jagadia and an improved product mix through the year. That concludes my updates. Now we can open the floor for questions. Thank you.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask a question. If you would like to withdraw your request, you may do so by pressing star and 1 again. In the interest of time and fair chance for all, we request the participants to restrict themselves with 3 questions initially and follow the queue for more questions. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. The first question comes from the line of Mr. Darshil Jhaveri from Crown Capital. Please go ahead, sir.
Hello. Good evening, sir. Thank you so much for taking my question. Firstly, congratulations on a great set of results, sir. Sir, just wanted to understand, we've given a very clear-cut guidance for, FY27, but in FY27, our capacities are not coming online in the start of the year, right? It's going to come towards the end. So, how do you see FY28 going forward when we have the full capacity of, the Dahej and the CCS coming online? So, what do you can see in terms of extra revenue coming in, sir?
Yeah, thank you, Darshan. The additional revenues comes from Dahej and Jagadia, the enhanced capacities, and also API we are expecting a good growth, and also the continued O&M expansion. Every year it is giving a good growth. This year, that's why that is only around 650 to 675 only is the range we expected, because the expanded capacities of 12,000 metric tons from Dahej 2, that is a new facility which is expected to come by end of the FY27. Though, in meanwhile, the existing Dahej and Jagadia capacities are going to increase, and also API and O&M. Because of that, we can achieve.
Hello? Yeah, so sorry, sir. Yeah.
Yeah, thank you, Darshan.
Yeah. Hello?
Hello? Yes.
Yeah. So I just wanted to understand. So next year, once the full thing comes in, so we are going from, current 18,000 to additional 12,000 capacity we are adding. So can we see, in terms of the, 65% ramp up, I think we are targeting, right? So that would also mean, hello?
Yes.
Yeah, around a 40% growth in just volume tonnage. So can we see a corresponding growth in revenue in FY28, sir?
Darshan, yes, of course, we will see that, but I would just like to tell you that, the first quarter of the next financial year, the ramp up will not be at absolute 100%. The capacity utilization gradually moves up quarter on quarter. So the Q1 will probably be at 30%, Q2 will gradually probably move at 40, 45 or 50, and likewise for the last 2 quarters for the new facility.
Okay. Fair enough, sir. And sir, just wanted to understand, in our current year, FY27, sir, do we have any seasonality? Because how do you see the, our revenue, in terms of H1 and H2? Because usually we have a very, steady run rate. So we can expect, the 650 crores to be, very steady, sir?
In the second half, that would be more. Q2 is more than Q1. H2 is always higher than H1.
Okay.
Slowly it will ramp up, yes.
Yeah. And sir, with regards to margins, sir, when we are saying 18 to 20%, right now, I think we are around 7%. So, again, H2 will be towards the higher end of margin, or at least the margins we can start seeing from Q1 itself, sir?
In H2, that will be more. Even if you observe Q4 margins are better, around 13-14% is there.
Yeah.
That will, in the Q1 of FY27, Q2, gradually it will move on. It will increase. At the end, we are expecting around 18 to 20%.
Okay. I have more questions. I'll just join back in the queue. Yeah, thank you.
Thanks, Darshan.
Thank you so much, sir. The next question comes from the line of Mr. Syed Nawaz, an individual investor. Please go ahead, sir.
Thank you so much. Sir, I have questions regarding the insurance proceeds for Sigachi. In the last earnings call, I guess, we were informed that the insurance proceeds will be processed by March 31st. So what is the status on the insurance claims and how is it going?
Yeah. Thank you, Syed Nawaz. This we expected during by March, but there is a slight delay in the procedure, and now it is in a moment. Some discussions are going on. By end of maybe around 25th or 30th of June, we are expecting some ad hoc amount, and later on that will be settled. Now discussions are actively on.
Okay. Another question that I have is regarding the API thing, which which happened for cystic fibrosis. So the target was originally that by Q4 FY27, this would be operational and we would see revenue coming from this aspect as well. So what is the status on that project, sir? If you could help guide us with that, please.
Yes. Yeah, the cystic fibrosis, this is during this year we thought of the filings, and anyway this is patent is under till 2039 by the innovator, and we have cracked the chemistry and the application that this year we can go for the filing this current year.
Okay, so will the production start this year only, or how is it going to be?
The R&D level, it's over, and then after filing, then we'll discuss with the innovator, and then that we'll come to know exactly when we'll start.
Okay. All right. Thank you so much. And also last question, sir, regarding the normalcy in the margins and all, because before the accident happened, the margins were in the range of 15 to 20%, EBITDA margins I'm talking about. So by what time can we expect the normalcy to return in the business? Because, it was very unfortunate that it happened, but for the future course, what do we think? Like, what would be the duration by when we can attain the same numbers again?
Sorry to interrupt, Syed, sir. We would request you to join back the queue for more questions, sir.
Okay, sure.
Thank you, sir.
No.
Thank you so much, sir. We have the next question from Mr. Vats Jain, an individual investor. Please go ahead, sir.
Hi, thanks for providing me this opportunity. I had a few questions regarding the API facility. So for FY26, what is the current utilization level of the Trimax API facility?
Around 65-70% is there.
Okay. Another question I had: how does the management is planning to fund robust capex initiatives? Like it would be an internal or an external fundraising?
Some internal accruals and also the fundraising also it is under discussions. Either we go for fundraising fresh or otherwise we go for the term loan.
Okay. Do we have any guidance around that?
Yeah, at appropriate time we'll disclose it. Right now that is in fluid stage.
Okay. Thanks for that. And another question I had. So when is the CCS facility expected to be commercialized?
CCS facility is expected to be commercialized by maybe the first quarter of FY28.
Okay. Do we have any specific timeline around that? Maybe a quarter-on-quarter thing or H1 type?
This quarter that is expected in FY28 first quarter, and then that commercialization also it happens immediately. The revenue is also expected to achieve it from that. And by end of FY27, we are going to the COD will come for MCC 12,000 metric tons capacity.
Okay. Thanks for this.
Thank you.
Thank you so much, sir. The next question comes from the line of Mr. Avnish Burman from Vaikarya. Please go ahead, sir.
Hi, good evening. Amit, just a couple of questions. One, your FY27 guidance seems to be pretty strong at about 35% growth. Out of this, what kind of growth are you expecting from MCC?
So,
Hello?
Yes.
Yeah.
I understood that. So, currently the capacity utilization is at around 60%. I believe we should be able to take it to a comfortable near 95-97% on this. The rest of the growth would come in from the API, the O&M, and the other verticals of food and nutrition.
Okay. Just help me understand this, please. After the accident, I would have assumed that some of your customers would have shifted to the competition. And also, in my understanding, this was a very sticky business because, the cost of the excipient as a percentage of the cost of, let's say, the tablet is very, very low. So unless you have a really good reason to shift to another supplier, the customer doesn't really want to shift. It's a bit of a headache for him to shift. Now, because of the accident, if some of your customers have shifted to the competition, the guidance seems that you're very confident of getting those customers back. So how is that happening? If you could just give some qualitative color on that.
So, see, I'll tell you, the catch point here is that the customers are definitely sticky. There's no second thoughts on that. However, because this is a very small percentage of the total purchase for a formulation mix, the API is probably a bigger chunk, 60 to 70% of the cost. The formulation guys always have vendor 1, vendor 2, vendor 3. And the second and the third vendors are usually kept dormant. And when there's a situation across the supplier, they kind of reactivate the vendor 2 and the vendor 3. So what has happened is that we continue to be the approved suppliers across our customers. Among some of them, where the demand continues to be high, they have moved on to vendor 2 because we have not been able to supply them because of loss of capacity. But I believe because of the kind of relations we maintain, because of the kind of, the length of relations which is there with them, the moment we have our products back on track, we will be among the preferred vendors and we will get back our volumes.
So how I'm understanding is that because of the non-supply, you move to vendor 2, but as soon as your supplies will come back, you will be given a priority to be moved back to vendor 1 because of your relationship. Is that how we should see this?
Yes, Avnish, that's right.
Okay, great. I'll get that. Thanks.
Sure, thank you.
Thank you, sir. We have the next question from Mr. Ganesh Prasad, an individual investor. Please go ahead, sir.
कैसे हैं सर आप? सर कहीं ये रिपोर्ट आ रही है कि अपना जो इंश्योरेंस हुआ है हैदराबाद प्लांट में जो फायर हुआ था वो अंडर इंश्योरेंस है, क्या ये सही है?
No. It's hi Ganesh. There is no under insurance. That is perfectly insured.
और ये प्लांट अपना कब तक रनिंग हो जाएगा सर?
It takes time.
So Ganesh, हम लोग का अभी वो focus नहीं है. Our focus is not that because we have land available. We focused everything back on the other facility wherein हम लोग fresh start करके we are already building up on the 12,000 metric tons capacity, double of the Hyderabad capacity. Because it is under legal issues, we didn't want to really delay it because in case we pump in money and it gets stuck on some legal issue, unnecessarily time and resources will be wasted. So Sigachi had land in Dahej SEZ and the project is already commenced some time back.
It's a very wise thought. Thank you.
Thank you, Ganesh.
Thank you so much, sir. The next question comes from the line of Mr. Vasu Goenka an individual investor. Please go ahead, sir.
Yeah, hi. So good afternoon to everyone, and thank you for taking the question. So I have two questions primarily. One is that what is the API revenue bifurcation for next year? How much we are expecting that the API revenue would be?
PIL. Thank you, Vasu Goenka. Around another 10 crores we are expecting in next financial year, 8 to 10 crores. It depends.
Okay, and
also, yes.
And what is the growth rate we are expecting?
Growth rate in PLI you are asking, no? Production link.
Not the PLI, sir, API. The API segmented.
Yeah, API we are expecting around this year we have achieved around 60. Next year we are going to achieve around nearly 100 crores, more than 100 crores.
Great. Okay. And my second question is regards to the promoter shareholding. The promoter shareholding has been declining like from last 2 years almost. So is there any chance that this number will ramp up soon?
Yes, we are expecting promoters are intended to increase their shareholding. It will not come down at least, and gradually it will go up.
So will it be back to the accident timelines, like the same 48-49%?
Yeah, that is the intention of the promoters.
Right.
And gradually it will go up. Yes.
Okay. And my last question is that is there any legal repercussion which is from the Hyderabad plant, which is like which we expect that something out of the blue can happen on that proportions?
For Hyderabad production, anyway, it takes some time.
Yes.
Expansion also, we have taken up our the Dahej facility. This
Yes.
will take, in near terms, maybe after 6 months, we'll get clarity on that.
But my question is on the legal repercussions. Will there any like kind of penalty or something like that?
Yeah, anyway, that is under court, and the matter is under sub judice.
Sub judice.
We don't expect any.
All right. Thank you so much. I have few more questions. I will be in line again.
Thank you also.
Thank you so much, sir. Ladies and gentlemen, if you have a question, please press star and 1 on a telephone keypad. I repeat, if you have any questions, please press star and 1 on a telephone keypad. We have a question from Mr. Paramjit Singh, an individual investor. Please go ahead, sir.
Yeah, good afternoon, Mr. Amit and the team. Sir, my question is regarding your Hyderabad facility. Do you still have any liability with respect to that? Do we see some exceptional losses coming up because of that facility in FY27?
Yeah, thank you, Paramjit. As far as our expectations, we have fully provided provision. In fact, some reversal would be there. And we hope there would not be any additional surprises or expectations. We have provided full provision.
Okay, sir. And in future, do you have any plans to restart that plant? I know it is under matter sub judice and it may take its own time. But do you have anything like come 1 year down the line, we will restart this plant, or you are going to shut down this facility?
We will, Mr. Paramjit, we will take the appropriate decision once, the matter is cleared by the court. Till the matter is in the court, we can keep having thoughts, but it might not really turn around the way we want it. So we are just waiting for the matters to get cleared from the court. Once it is cleared from the court, I think we will see in the bigger interest of the long-term growth as to what is the best options available, and we will go ahead with that option.
Okay. All right. Got it.
Thank you.
Matters in the court typically takes, what is your guess and analysis, sir? Will it be kind of fully cleaned and clear in 1 year's time, or you have some guess on that?
Paramjit, sir, the matter is sub judice, so I think less spoken the better, sir.
Yeah, got it. Okay. Yeah. All right, sir.
Thank you, sir. Thank you.
Thank you so much, sir. The next question is a follow-up question from Mr. Vasu Goenka, an individual investor. Please go ahead, sir.
Yes. So my another question is in regards to the current debt obligation. It stands at 145 crore as of now. So do we see that this debt repayment, and what will be the structure on the same?
Yeah, thank you also. This, as of now, we don't have any long-term debt. This is only towards the working capital debt only.
Okay.
Other than that, we don't have any long-term debt.
Okay. And lastly, how about the current capacity utilization for NCC? Is it like earlier it was upwards of 75-80%? How is it going now?
Now also, as of now, as on 31st March, it is around 75-80 only. But going forward, it will increase in this year. In this quarter already started. Already that will increase, and also further at the end of the year, we are expecting another 12,000 metric tons.
All right. Thank you so much. Thank you so much for your answers.
Thank you, Mr. Vasu.
Thank you so much, sir. The next question comes from the line of Mr. Ravi Kumar Kantipudi from Indian Overseas Bank. Please go ahead, sir.
Sir, what is the percentage of exports to in our total turnover, and to how many countries, sir? And what is the prospectus that our products to export? The export to turnover, how much?
Yes, sir. Thank you, Mr. Ravi Kumar. The export turnover for FY26, it is around 65%. And we are exporting total in our portfolio around 60 plus countries are there. Actively we'll supply the major chunk, it will go to USA and the neighboring countries and European and other countries also. Around total 60 countries are there in our portfolio.
Okay, sir. Okay. But our performance not reflecting in the market, seeing our
yes,
why?
Because of this disturbance in June, the Hyderabad incident. After that, there are even because of in last quarter geopolitical situations also, the exports didn't happen. That's why the exports percentage also it has come down for the entire year. Last year it was around 72%. It has come down to around 65% because in the February and March the exports didn't happen, and domestically we have sold. That is one of the reasons for reduction. And after post incident, there was additional expenditure we have incurred. Because of that, the profitability has come down, and the business also it has come down little. But again, we expect that it will go again back to normalcy. We'll ramp up.
Okay, sir. Thank you very much.
Thank you, sir.
Okay.
Thank you so much, sir. The next question is a follow-up question from Mr. Sajid Nawaz, an individual investor. Please go ahead, sir.
Thank you so much, sir. Sir, I have the question regarding the normalcy in business. So basically, as I previously mentioned, that before the incident happened, the margins were at the range of 15 to 20%, and after the incident, again the margins fell down to singular digits. So when do we expect this normalcy to come back in the business? And basically, when would we get to see the same operating margins and the net profit margins again?
Yes, yes. Gradually it is increasing. The main reason for reduction in profits post-incident is we have the safety audits and internal audits, external audits and customer audits and safety precautions taken. And because of that, some the production overheads increased and production also it didn't increase. Because of that, there was a drop in the margins. But gradually from this year, it will go up. And maybe we are expecting by FY27 or mid of FY28, it will come to complete normalcy.
Okay. Thank you so much, sir.
Thank you. Thank you, sir.
Thank you so much, sir. The next question comes from the line of Mr. Vats Jain, an individual investor. It's a follow-up question. Please go ahead, sir.
Hello, sir. Thank you. Just had another question. Like, what is the status of JV in the Middle East? And like, are we getting any revenue from that? Any guidance from management on that?
Yeah, thank you, Jay. Because keeping of the present global situations, we just kept it on hold. Maybe after it comes to normalcy, the global war and all international situations, maybe after 6 months will come some clarity. Right now we have kept it on hold.
Okay. Okay, sir. So, like, what timeline can we expect it to resume?
Maybe another 6 months.
Okay.
Yes.
Okay, sir. Got it.
Thank you.
Thank you.
Thank you so much, sir. Next, we have a follow-up question from Mr. Vasu Goenka, an individual investor. Please go ahead, sir.
Thank you so much. Just want to understand, as earlier informed, the API is 100, like the number was 100 crores. Can you specify the percentage of the total revenue? Earlier it was mentioned it will be 12%. So are we still aligning for 12% or more than that?
It will go. This year, the percentage of API is 14%, and MCC contributed 70%, and O&M contributed 12%, API 14%, and other are 4%. This year, API contribution, it will go up maybe around 18% up to nearly 20%. It will go up.
All right, sir. Okay. And lastly, is there an option available to get the physical annual report, the hard copy?
Yes. Okay. We'll. Anyway, the soft copy is available, but okay.
You can send in an email, Vasu. You could send in an email on the cs@sigachi.com and with your address, of course, and in the needful would be done. Not at all an issue.
All right, sir. Thank you so much, sir. Thank you.
Sure.
Thank you so much, sir. We have a follow-up question from Mr. Paramjit Singh, an individual investor. Please go ahead, sir.
Yes, sir. Thanks for the opportunity again. My question is, what are your capex plans for FY27 and the distribution of the same?
Yes, sir. Thank you, Paramjit. This capex, MCC 12,000 metric tons capacity expansion is going on at the H2, and also the CCS. MCC 12,000 metric tons, the capex is 106 crores. And CCS total project cost is around 90 crores.
And this would all be done this year, or some of it is already kind of taken care of?
Yeah, already this year, and next year, maybe first quarter also, some of the amount will be there. CCS.
Okay, sir. And like the way you are expanding, is it kind of okay to expect, let's say, 1,000 crore turnover in FY28?
Not in FY28. Okay, anyway, this is futuristic, but next year we'll get more clarity. But definitely we'll reach 1,000 crores in not in FY28, in maybe FY29 or so, we hope.
Okay, sir. Thank you very much.
Thank you so much, sir. The next question comes from the line of Mr. Raj Bora, an individual investor. Please go ahead, sir.
Hello. Sir, congratulations for the results. I wanted to know one thing, that what are the plans for debt reduction of the management?
Debt reduction.
Yeah.
Already now it is showing as around 4 crores shares were pledged, but the debt outstanding is around 13 crores or so is there. Gradually,
okay.
It is coming down, and then that will come down further by end of this year, and then gradually, as and when there is a need, then they will they will bring the funds, and then that can be paid off.
Okay, sir. And also, recently there was a degrade in the credit rating. So, what were the management plans and opinions on the same?
Post-incident, there is a reduction in profit. That's why all of a sudden there was a reduction in downgrading of the rating. But gradually, we hope that will go up again. This year, Q4 profits are good, and even we are expecting in coming quarters the profits will be good, and the performance also we are expecting it will be. And then we expect that some rating improvements.
Okay, sir. Great. Thank you. Congratulations for your results.
Thank you.
Yes.
Thank you so much, sir. We have a follow-up question from Mr. Avinish Burman from iBuyKarya. Please go ahead, sir.
Yeah, hi. Thanks for the follow-up. Amit, two questions again. One on the CCS, if you can give some color on, the timeline when we hope to commercialize. And also if you image is by leaving your competitors' balance sheet that it's a higher margin product. So, do you make much higher margins here, or do you think you have to be a little aggressive on the pricing to pull in some customers? And what kind of margins will you make on this CCS?
Hello. Yeah, Avnish. This CCS, it is but it gives higher profits, superior in excipient, and the price is, when we compare to MCC, almost 2 to 3 times higher than the MCC, and margins also on higher side. We expect there is even now also we are receiving inquiries and some of the customers asking us to dispatch the CCS along with MCC. We are seeing a good demand for this also, and it gives good top line as well as the bottom line also. Margin contribution will be, we are expecting that it will be.
So can we expect a much higher EBITDA margin than 20% that you make on the
Yes. Even this CCS, that would be even higher than that, around more than 20%.
More than 20%, right?
Yes.
And what are the timelines? When do you expect to commercialize?
Q1 of FY28.
Q1 of FY28. Yeah, thanks. That answers the first question. Second, as per the guidance of FY27, the revenue and the margin guidance that you've given, I just wanted to know, the confidence level of that. Is it based on signed deals, or is it like how does it work? I mean, do the POs get signed for 1 year and hence your confidence level is very, very high on achieving that 650 crore number? Or you're hoping to maybe get there during the course of the year?
Yeah, already we have some plans, some business talks are there, and also we are expecting the additional contributions from API and the capacities from Dahej and Jagadia will be increased in a really top line and top line. We expect that from all these activities, we hope we'll achieve that 650 to 675 top line with EBITDA margins of around 18 to 20%. The major
I'm assuming this.
Yeah, the major contributors are API is there, OEM is there, and also the expanded capacities from Dahej and Jagadia. And of course, the 12,000 metric tons, it comes in the last quarter. But all these put together, we can.
Thank you so much, sir. The next question comes from the line of Mr. Raghav Rathi from Quadrant Holdings. Please go ahead.
Good evening and thank you for the opportunity. First of all, I would like to appreciate the management in taking initiative and steps to getting back to normalcy after the fire incident. So my question is, in the coming 2 to 3 years, what I understand from the market is the demand for our product is always more than what we can produce. So are we going to be doing capex continuously for the next 2 to 3 years where we can get to a capacity of MCC to around 50 to 70,000 metric tons?
Thank you, Raghav. As we keep on gradually, we keep on increasing the capacities. Anyway, market demand is there, and so long as demand is there, we have to increase the capacities. We are in the plans of increasing the capacities.
How much capex is required to take our capacity to somewhere like around 50,000 metric tons? And do we have enough land for it, or do we have plans that we are taking up to reach there?
Yes, Raghav. This 12,000 metric tons capacity at Dahej too, there is a capex of around 106 crores. In Dahej, we have 20 acres of land is available, and in Kurnool, we have 25 acres of land is available. There is enough land available, and going forward, we keep on increasing the situations depending upon the requirement. And we also analyze the market and then we go ahead.
And what will be our vision for, like, where do we see our revenue and capacities by 28 or 29, probably after in the next 2-3 years?
Yeah, for the next 1 year anyway, this 12,000 metric tons MCC and CCS also with 90 crores capex, it is coming up. And later on, we'll announce at appropriate time what is the next expansion. But we expect there is a expansion plans are there.
Thank you for answering my question, sir. All the best for the future.
Thank you, sir.
Thank you so much, sir. The next question comes from the line of Mr. Darshil Javeri from Crown Capital. It's a follow-up question. Please go ahead, sir.
Hello. Thank you so much for letting me ask the question again, sir. So just wanted to know, like, I think total around we're doing 200 crores capex, right? So you said we might, do a fundraise and some debt. So do we have any rough mix of, how much we want to fundraise, how much we want to do from debt, like, how much we want to increase our debt level, sir?
Yeah, right now, as I have already indicated, that is what is the portion of fundraising through equity or debt. It may be a combination, but we'll announce at appropriate time. Now that is in fluid stage, some internal accruals and some the term debt would be the term loan would be there. The other one maybe from equity. We'll announce it once we form our decision.
Yeah. So just wanted to understand, like, once the full capacities of CCPS and MCP come into play, what's the peak revenue we can generate from this, sir?
Yes, these 12,000 metric tons, almost around 200 plus 220 or so, the revenue it is expected. And from CCS, it is around 100 crores revenue we can expect. And further, there are other plans also are there to increase the revenues.
Oh, okay.
Apart from this existing.
Okay. That's fair enough, sir. Yeah, that's it from my side. Thank you so much, sir.
Thank you, sir.
Thank you so much, sir. We have a follow-up question from Mr. Paramjit Singh, an individual investor. Please go ahead, sir.
Yes, sir. One more question that I have is, what is your CCS utilization across the Dahej and Jagadia plant in Q4?
CCS utilization you are talking about? CCS, that is to come up in Q1 of FY20.
No, sorry. MCC, I mean, yeah.
Yeah, MCC, now the utilization is around 75 to 80%.
Okay. Sir, maybe I may be missing something, but you had your plant in Hyderabad getting shut down, and whatever were the requirements, obviously you would like to push it to your other plants in Dahej and Jagadia for MCC, but still your utilization was 75%, right? I mean, any specific reason or constraints that helped you not to move that utilization to 90-95%, and what makes you think that this year it can become 90 to 95%?
Yes. Yeah, post accident, we had more concentrated on safety norms and safety protocols, safety equipment and internal audits, safety audits, internal and external audits. We concentrated more on that. That is the reason the production side it is under utilization is there, but from this quarter onwards it will go up. The concentration was on different side. Yes.
So this year you are confident, sir, that utilization will be north of 90%?
Yes, it will go.
Okay. One more thing, sir, give us a color of your EBITDA margin across your different revenue streams that you have, including the API, O&M and everything. How is the EBITDA margin profile across different revenue streams?
Yeah, these EBITDA margins in O&M more steadily it is around 21, 22. And the MCC, it is this time it has come down post accident. Otherwise, it will give from API we are expecting more from this year. around 20 plus. But MCC, it will gradually increase. Right now, this quarter, we had achieved around 13-14%, including other income, everything put together around 14.58%. If we separate the other income, then it is around 12.5-13% is there. And MCC also, it will go up gradually. And API, we are expecting good. O&M, as I said, that is around 21-22%. This year, we are expecting that O&M income from O&M also, it will increase further.
Okay. Thank you, sir. All the best.
Thank you. Thank you, sir.
Thank you so much, sir. The next question is from Mr. Vasu Goenka, an individual investor. It's a follow-up question, sir.
Yes, thank you so much for letting me ask another one. Just want to understand that is there any PLI scheme again coming up for the concerned MCC?
Which one? Can you please repeat? I missed.
So there was a PLI scheme which the income which we have received last year. Is there any proceeds available for this year as well?
Yeah. This year also we are expecting around 8 to 10 crores. It is expected to receive.
Okay. And secondly, as I was basically looking after the statements, so there were some assets which is declining, the other asset section, and it has declined by a good percentage. So can you specify this?
The assets, because the insurance after the accident, we have written off those assets. And anyway, however, we are expecting insurance claim for that.
Okay, so and regarding this insurance thing, is there any caveat out there that there are certain degrees that the amount was of 60 crores? So is that amount is still 60, or is there chances that this number will decrease?
Yeah, total around 49 crores towards the asset loss, fixed asset loss, and inventory loss of around 4 crores, 4.5 crores, total 53.5. And also apart from this, we are expecting business interruption loss. We have a policy for 25 crores and we are expecting around 16.5 crores. This starts after the end of 12 months. After 30th June FY26, they will review.
Okay. So there is no caveat onto it, any other like claim on unclaimed issues?
Yeah, right now it is expected to receive and then it is in our favor only. There are no
All right.
issues.
All right. Thank you so much. Thank you.
Thank you.
Thank you so much, sir. That would be the last question for the day, sir. Now I hand over the floor to the management for closing comments.
Thank you. As we conclude, I would like to reiterate that Sigachi enters FY27 with stable operations, expansion projects progressing in line with the plans, and an organization that has been meaningfully strengthened over the course of the past 1 year. Our strategic direction remains unchanged, expanding capacity, improving our product mix, and delivering consistent and profitable growth through disciplined execution. We look forward to updating you on our progress next quarter. Thank you.
Thank you, sir. Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and for using Dursabha's conference call service. You may disconnect your lines now. Thank you and have a pleasant evening.